This indicator automatically draws trend lines on the chart based on the highs and lows of the price. On top of this, it also labels instances on the price where the trend line has been broken, which can serve as areas of potential trade entries. If you love trading trendline breaks like me, well, you're in luck, because in this video, we're gonna showcase exactly how this indicator works and how to use it to spot super profitable trades like this one, or like this one. Let's get into it. Now, this indicator is called Pivot Trendlines with Breaks, or just the PT indicator for short. To add it to your chart, you just click here, then type in Pivot Trendlines. Select this one by Getty. Also, for this video, I'm going to be using the 5-minute time frame of TSLA, which is the ticker symbol for Tesla. Now, this indicator is a powerful tool that uses pivot points to identify potential shifts in market sentiment from bullish to bearish and vice versa. The pivot points are calculated using the high, the low, and the closing prices of a trading security. The Pivot Trendlines indicator takes this concept a step further by connecting these pivot points to form trend lines. These trend lines are not just visually appealing, but they also provide crucial information about the prevailing market trends. As the name suggests, pivot trend lines are trend lines that are drawn over the pivot highs or under the pivot lows, giving you a visual representation of market trends. This can be incredibly useful for identifying and confirming potential trade entries. This indicator also includes several customizable settings. The pivot length allows you to adjust the number of bars required to form a pivot point. This can be especially useful if you're looking at different time frames or if you want to fine-tune the indicator to suit your trading style. Next, we have the pivot type setting. Here you can choose between two options, normal and fast. The normal option uses TradingView's built-in pivot system, whereas the fast option uses a custom pivot system designed to track trend reversals. For this strategy, we're going to stick with the normal pivot setting. The repainting checkbox allows the indicator to adjust the signals with new data. If selected, the signals may change with real-time data. When disabled, it's going to wait for the candles to close before displaying the signals. This is to avoid showing potentially false signals that could change with incoming data. The styling section offers various options for customizing the visual appearance of this indicator. Now, what is this indicator made of? Well, looking at this, we can see that it does consist of several different trend lines drawn on a chart. A green line like this one indicates a bearish trend line, and a red line like this one indicates a bullish trend line. Now, you may be thinking,
but why would a bearish trend line be green instead of red? I mean, it's bearish, and red is usually associated with bearish or selling.
Well, the reason for this color coding is because of the next feature of this indicator, which is Trendline Breaks. You see, every time a bullish trend line is broken and a candle closes below it, that candle is labeled with a BR, which stands for break. This label is also a potential indicator of a place to enter a short trade. Just like short trades or short selling are typically associated with the color red, coloring a bullish trend line red acts as a visual cue. It reminds us to consider entering a short trade as soon as that line is broken. On the other hand, bearish trend lines are colored green. When one is broken and a candle closes above it, it indicates a potential entry for a long trade, reflecting the relationship between buying and the color green. To simplify this, when a green bearish trend line is broken, you buy, and when a red bullish trend line is broken, you sell. Now, this indicator is already showing lots of potential. However, just like any other indicator, this one cannot be used alone. I'll open the indicator search tab and type in smooth moving average, this one under technicals. Next, type in volume, select this one under technicals. Double-click on the smooth moving average, and on the inputs tab, change the length to 200. Then on the style tab, change its color to yellow. For the volume indicator, click on these three dots right here, then click on Move To, then select New Pane below. This is going to remove the volume indicator from the main chart and display it on its own separate window. Next, double-click on it to access the settings. Then on the Inputs tab, change the MA length to 9. Then on the Style tab, activate the Volume MA. and change its color to white. Now, let's explore what each of these indicators is going to do in this strategy. But before we do that, if you're looking for an exchange to trade crypto, then check out Pionex. Not only can you trade manually on Pionex, but you can also take advantage of over 15 different crypto trading bots which you can set up to automatically trade for you 24/7. If you don't want to use the existing trading bots, you can even set up your own trading strategy in PineScript using their own AI chatbot called pionexgpt. If that's not enough, you can also explore their GPT marketplace to see the profitable strategies that people have created using Pionexgpt. So as you can see, there is something for everyone on Pionex. Once you find here the strategy you're interested in, you can simply click here and then here to copy its trades. And one more thing, if you sign up using the link in the video description, you'll get access to a 20% discount on all your crypto trading fees. So sign up using the link in the video description. Now back to the video. Every time these volume bars are above this white moving average, that indicates that there is enough volume in the market and we will be looking to take trades. We will not take any trades when these bars are below this white moving average because there simply wouldn't be enough volume in the market. The smooth moving average is a trend confirmation indicator. When the price is constantly trading above it, that signals a bullish trend and we will be looking to take only long trades. Conversely, when the price is constantly trading below it, that indicates a bearish trend and so we will be looking to take only short trades. To understand everything better, let's take a look at how we could take some trades. For a long trade, the first thing that we're going to look for is a short-term bearish trend within a long-term bullish trend. To confirm this, we need two things. First, a green bearish trend line should be plotted on the chart, like this one. And then all the candles under this trend line should be above the 200 period smooth moving average. Second, the price should break and close above the bearish trend line to indicate an end of this short-term bearish trend and a continuation of this long-term bullish trend. If you're not sure that the price is closed above the trend line, you just look for this BR label. If it's there, then you're good to go. This now becomes our potential entry candle. Lastly, for this potential entry candle to actually become our entry candle, we want to confirm that it has enough bullish volume to push the price in the direction of our trade. To confirm that, we just make sure that this last bar on the volume indicator is above this white moving average. All our entry conditions are met on this candle, so we're going to enter a long trade here. The stop loss is going to be set below the most recent swing low. For the take profit, we're going to set it at 3 times the risk. We let the trade run. And take profit. For short trades, we're going to do the opposite. So first, we want to have a short-term bullish trend within a long-term bearish trend. To confirm this, we're going to look for two things. So first, a red bullish trend line should be plotted on the chart like this one. And then all the candles above this trend line should be below the 200 period smooth moving average. Second, the price should break and close below this bullish trend line to indicate an end of this short-term bullish trend and a continuation of this long-term bearish trend. Again, if you're not sure, just look for this BR label. This now becomes our potential entry candle. Lastly, for this potential entry candle to actually become our entry candle, we want to make sure that it has enough bearish volume to push the price in the direction of our trade. To confirm that, we just make sure that this last bar of the volume indicator is above this white moving average. All our entry conditions are met on this candle, so we're going to enter a short trade here. The stop loss is going to be set above the most recent swing high. For the take profit, we're going to set it at 3 times the risk. We let this trade run and take profit. The Pivot Trendlines Indicator is a versatile tool that combines pivot points and trend lines to provide a comprehensive view of market trends. Whether you're a beginner or a professional trader, this indicator can be a great addition to your trading arsenal. That's been it for this video. I hope you found some value. If you did, hit the like button below and consider subscribing to stay tuned. Thanks for watching. See you next time.